Good afternoon, everyone, and welcome to our webinar today on the business financial resources. I'm Rhonda Franklin with the City of Dublin, Management Analyst, and I also have with me Hazel Weatherford, the Economic Development Director.
Thank you, Rhonda, for that. Welcome today to our small business webinar on business financial resources. We are great to have you all here today. I'd like to take a minute and thank our panel and welcome them as well. We have Jimmy Cheatum with Chase Bank, Sarah Samuel with Key Point Credit Union, and Vincent McCoy with the East Bay Small Business Development Center. And we're going to be talking to you today about a lot of topics in the business financial realm. And we're going to start off by talking about current trends in the market, available financing, business financing management, and then answer some questions from the audience. We do have some questions that came through with your registration, so we will tackle those first. And then as we're having this discussion, if any questions come to mind, please feel free to drop them in the Q&A or in the chat, and we will address them as under our Q&A later on in the session. So welcome, Jimmy, Sarah, and Vincent. I'm looking forward to our discussion this morning. Is it still, or this afternoon? And supporting our small businesses here in Dublin. This is being recorded and will be provided on our social media channels and our YouTube. So let's start off by having a conversation about the current trends in the market and what are you seeing in regards to small business financing right now, considering the pandemic recovery, the inflation, and the changing economy. And feel free to jump in.
Well, I can go. I'll be brave. Hello, everyone. I'm Sarah Samuel with Key Point Credit Union, and I really am appreciative to the City of Dublin Small Business to allow me to speak. But, you know, the three things when we're looking at some of the trends, what's going on in our marketplace and our economics situation, we just got hit with a pandemic, recovering from COVID. So the three looming things that you hear a lot of people talk about today, or the buzz, is inflation, of course, and how is that affecting small businesses, but also how banks are looking at loans, small business loans. The other thing is still kind of looming and is still there is COVID, you know, and the impact that it had to the small business prior, and how well are they recovering. The other thing too that, you know, we're looking at is how has this hit us is in labor disruption, you know, and the things that it impacts is labor disruption, rising interest rates. So you as a small business owner, how is that affecting you? And I think and how is that going to affect you in the future? And one thing I do want to know is that, you know, we've seen this before. Inflation isn't a new thing. And you look back into the 1980s where, you know, interest rates, the feds were raising the rates and the interest rates were as high as over 16% at one point. And I know everybody gets scared with the interest rates rising as the Fed continues to raise the rates and may continue to do so. But small businesses are really resilient, and it's just being understanding of what their market is, understanding their costs and how it's impacting their supply chain and their overall, you know, cost of goods. And remembering that, you know, as in challenging times in the, you know, in the prior days of inflation, how small businesses rebounded, I believe that small businesses can rebound now. So I can let the next speaker.
Great, thanks, Sarah. Vincent or Jimmy, anything to add to that?
Well, sure. Among the things that we're seeing is the tightening of credit is an issue for some businesses, so they're concerned about whether or not they have access to capital. One of the short-term stopgap measures is things like the Dream Fund, which is put out by the state, which is getting people the ability to get grants for $5,000 to $10,000. But for many of the businesses, especially if they're existing, that is woefully inadequate in terms of the amount of money they need to keep their businesses moving forward. It like I said, that's why I think it's more of a stopgap, and it gives them hope that they can maybe meet 1 month or maybe one employee payroll for a month or something like that. But so that's one of the things we're seeing, and we are seeing it's more difficult for businesses to come up with high quality financial projections about what sales and what revenue are going to look like when they're being hit also on the other side with high cost increases. As an example, I'm working with a business that's seen 3 cost increases from their major supplier in 1 year. So their costs have gone up by 30%. So, and maybe that ties into what Sarah said about the, the labor disruption and that type of thing. But it's a tough road for business owners. But for those who have their act together and have good relationship with their financial institution, I think they will survive and do well.
I think one thing that's really interesting is that, since the pandemic, I mean, people ask us, are businesses doing better today than they were, during the pandemic? And then the answer would be yes, of course. Depending on, a lot of times it's like, it really depends on the industry that the business was in. Some small businesses were not impacted at all because of the industry that they were in. In fact, they saw phenomenal growth during the pandemic. And what Vincent just said is about, really the small business really understanding their books and understanding their costs, and how can they control their margins? How can they pass that on to, knowing that the costs are going to rise? How are they going to, pass on that cost? And these are decisions and business decisions they have to make. And as Vincent just said, it's really important that they understand their business plan. They have to go back, review it, look at it, and look at their projections again, and take into consideration the rise in interest rates, the cost of additional capital, and how is that going to impact their balance sheet?
Yeah, I'm glad you mentioned that. I was recently I was visiting a restaurant, and they had a sign outside, and it just intrigued me. It was a way for them to share messaging with their clients that our costs have increased due to inflation.
Yes.
We're not trying to make more money. We're just trying to survive. So please take that into account. And I thought that was a good messaging to share to those of us that are purchasing their goods, to let us know they're not trying to make more money, they're just trying to survive, and the costs are increasing on them. Of course, they're passing that on to the consumer.
Absolutely.
Yeah, great. So moving on to our next topic about available financing, and it's an interesting topic because many, like you said, Sarah, some businesses were not impacted. Some businesses actually thrived, especially those like home improvement businesses. So many people were doing DIY projects and others. And then some of even our restaurants or our food and beverage establishments were able to pivot and turn into like a grocery store and provide groceries and still maintain their staffing at the pre-pandemic levels. So people got they got really creative in their business plan and what they were offering. So, and we're also seeing more businesses opening now. So let's talk about available financing. Before we get into that topic, Rhonda, do you want to mention the current micro business grant that's available to micro businesses?
Absolutely. So the California Office of the Small Business Advocate recently made available quite a large sum of funding for small businesses in Alameda counties, other counties as well, but Alameda County is included. And it provides grants of $2,500 to micro businesses. So these are businesses that have fewer than 5 employees and earn less than $50,000 a year. And they're for businesses that are micro businesses that were in operation since 2019 and that are still in operation and that were impacted by the COVID-19 public health restrictions. So for businesses that fall in that category, that funding is available. And I will put the link to those applications in our chat box so that you can find out more information. And the deadline for that program is coming up. It's on August 12th by 5 p.m. It's an online application.
Great. And for those that may not have the chat feature turned on or are on their phone, we will include that in our communication after this webinar, and our follow-up communication. We'll provide that link as well. So Sarah, Jimmy, and Vincent, what are some of the forms of private financing that's available, or that you're seeing for small businesses, or that you provide?
Yeah, thanks, Hazel. Yeah, so for Chase, we're providing business lines of credit, equipment financing, and also owner-occupied real estate financing. So for any businesses that have any type of, or going to plan to bring their account to Chase Bank, we're able to offer that financing even for small businesses. If you have collateral, it's a little bit easier to obtain financing than if you don't have collateral. But with a lot of businesses, based on the industry, the specific industries that are more preferred than others. But for any business owner, we're providing, all sorts of different financing for that.
What I'm seeing and working with small business owners, I am specialized in SBA lending. And so when you look in terms of being able to raise capital for your business, whether it be private, conventional, or maybe you go the SBA route. When we look at in terms of private financing, I'm seeing a lot of borrowers being more creative in terms of maybe they don't have the down payment. Let's say they're trying to relocate their business, or they're trying to acquire a business. They can work with the sellers to get a higher private note so they don't have to put as much down, so that it could be a source of down payment so they can afford the property. Because as we know, affordability, when we look at debt service and the ability for that business to pay that loan, it gets more difficult and challenging for small business owners as the interest rates, the affordability, the amount that they can borrow, it's lessened because, and is it really enough, for the small business owners? So I really encourage, when you look in terms of private financing, is to work with, if you're in negotiations with the seller for a purchase, or, bootstrapping friends, family, partnerships. Maybe there's power in numbers. I always found there's some business owners, they want to be an owner by themselves, but unfortunately they're unable to afford or start the business by themselves. So they find a partner so they can leverage their risk and be able to leverage their assets. So there's different ways that you can raise capital with a combination of private and conventional and SBA.
Great, thank you for those resources. Now, Vince, I know you're not a financial lender, but anything to add to that topic?
Well, among the things is sometimes if you're a business, your vendor may be willing to finance your purchases for inventory and equipment because they've seen a downturn in their demand. And so they've opened up new opportunities for you to get funding. So that instead of getting a bank loan to pay for a piece of equipment or a bank loan to pay for something else, you can also go to that vendor and they may be willing and able to provide you with some financing. It may only be 30 days to 6 months, but as an example, in the pharmacy industry, a lot of pharmacies, if you're buying product now that you're going to use during the cold and flu season, that vendor will be willing to provide you 0% interest until January or February. So that's another way that you can get some money to operate your business without having to pay it out.
Vincent brings a really great point.
That's a great tip, great resource.
I find that a lot of people who are trying to start their business, like for example, I was speaking to this one business owner, and he was trying to start a laundromat, and he was buying the facility, but he had to replace all the equipment. There are specialized boutique lenders that specialize in that specific realm, and they understand the business. The turnaround time for them to receive financing is quick because these are specialized lenders that know the business. And like for example, a dentist who's trying to break out into his own practice and start his own dentist practice after working with a group. but he needs to buy equipment. There are specialized financiers just for dental equipment and dental startup costs, and it doesn't have to go through a bank. So Vincent really brings up a great point.
That's fantastic. Now, Sarah, you mentioned earlier about the interest rates rising. So a question I would have is for you and for all the panelists, is now the time to move on obtaining financing, or would you recommend businesses should wait to see what happens? What do you think?
Here's my feel about that. The answer is always, it depends. It depends on the business, and every business is not the same. Every business need is not the same as the other. And so I would say, if you have a need and it's hindering your growth, and your business can support the debt, why delay your growth, right? There's ways to structure. Like, for example, I told a bar, hey, there's a lot of bars that are in variable rates right now. And they're probably freaking out because of the rising interest rates, and they're look at your balance sheet. What kind of business debt do you have? Refinance it into fixed rates. There's different things you can do, but I would always say it depends on your business. A question that would be asked me is, has your business lending slowed down? And I would respond to that, no, because business is always going to continue to grow. There are people with online retail stores. They've forgotten the brick and mortar, and they decide to go all retail online, and they're booming, and they need capital because to purchase inventory. But that inventory can't wait because they're seasonal. They have to have the loan now. So again, I haven't seen that the rising interest rates, does that affect how much they can borrow, and they have to plan accordingly? Yes. So, it's kind of depends on the business.
Yeah, I agree with Sarah on based on the business, but I also look at what happened with COVID. So if some of my examples, I would tell a lot of clients that when you need the loan, you're already a couple months behind. So, example, let's say it's a manufacturer, right? Cash flow is great. This is before the pandemic. And you're explaining, hey, this is probably a good time to get a business loan or a line of credit because you just never know if there's an unforeseen circumstance. Well, I think we all can agree, nobody thought COVID-19 would come into play. That was the pandemic that pretty much shut down the world, it's certain, especially here in the United States with a lot of businesses. So I tell my clients, if we're looking at if your tax returns are looking at your cash flow, if your cash flow is good, you should get a line of credit and have it just in case. It doesn't mean you have to use it. Most of the products that we offer at Chase have no annual fee for a line of credit. So it's better to have it just in case you go into a situation like we did with COVID, and now you can go and borrow from that, because it's harder, especially during the pandemic. Obviously, a lot of businesses that had to shut down, their returns don't look as they did pre-pandemic, and that's not all business. So with a lot of banks, it's based on cash flow. So even if the rates continue to go higher, which that's what we expect to happen, if you have the cash flow, that the returns look good, you've talked with your advisors, I would go and get a line of credit wherever, if it's at a small bank, big bank, just because you want to have it just in case. You don't want to get to the point where you're in desperate need and then your financials are kind of out of whack and then you can't get it. And then, so that would be my advice that I would give to my clients.
That's a good tip. That is a good tip. Just because you have it doesn't mean you need to use it, but you have it in case.
Correct.
Right. And if you can get a yes, take the yes.
I think, to echo both Vincent and I'm sorry, what was your name?
Jimmy.
Jimmy, Vincent and Jimmy, is that a lot of businesses tend to wait. And it was funny. It's kind of like people who are trying to purchase a home. They're waiting for the interest rates to drop. Oh, I'm going to wait.
Right.
I'm going to wait. Well, guess what? So I would say if your business is in need, don't wait. And but a thing too is I understand with small businesses, you know, maybe they don't have good historical cash flow. Maybe they can't, maybe all you need is 10 to 50,000. And what are the resources? What is the type of loans available for that? There's, you know, what can be offered through your SBDCs and in terms of microfinancing. You can go to sba.gov to find your express lenders, because SB Express loans, you know, it's going to be a lot less documentation than the, say, a normal standard
Correct.
SBA 7A loan, a smaller amounts. But also please consider the SBA just announced, not only did the rates go up another, what, 75 basis points yesterday on prime rate, the spreads have also changed in terms of what a lender can you know, add on to prime. So those have increased. And so yes, the impact to the borrower is going to be a higher rate. So that should all be considered, taken into consideration as to what it is that you really need to borrow.
That's great. And thank you for that, because you've kind of segued into our third topic of business finance management and talking about, you know, what can be outsourced separation of duties and finance management services and all of that. So we're just going to jump right on in or continue the conversation there. And Vincent, I'd like to turn to you and talk about the services that East Bay SBDC offers. Many of our businesses are not aware of the free services, consulting, business planning, and all of that. Do you mind sharing with us what's available so our small businesses know that they can reach out to you? Oh, you're muted.
Yes. What we do primarily is we provide one-on-one advising and consulting services to existing and startup small businesses. And what that allows them to do is bring a problem or an opportunity or question to the table. And our goal is to get to some sort of positive answer for that business owner. It may not be that we can get them a loan, but maybe we can help them understand what it takes to get a loan. It may not be that we can increase their sales, but we can help them do some market research and understand better how their business operates. The second thing we do is we do workshops. We are currently putting together a series of workshops on digital marketing, which will help businesses, existing and startup, improve their online presence, whether it be social media, websites, and other aspects of being online and being a successful business. And the third thing that we do primarily is we connect business owners with resources and people that can help them, because we recognize we can't do everything. We don't lend money, for example, but we can connect them to someone who can help them with their business, their financing. That's our goal. And I'm really agnostic about where businesses come from, and particularly agnostic about where they go, as long as that place that they go can give them the help that they need.
And is there a cost to the services that you provide?
No, because we are what we call your tax dollars at work. Our primary source of funding is the U.S. Small Business Administration. We are currently receiving matching funds from GoBiz, which is the California Governor's Office of Business and Economic Development. So we have those three big pots of money that we use, and then we also reach out to local organizations and financial institutions to get support for our services. So they're free.
Wonderful. That's a nice word. They are free services, and we will be sharing the SBDC's contact information in our follow-up email with all our businesses. So turning to Sarah and Jimmy on business finance management, and one of the topics that has come up is business plans, and should businesses revisit their business plan now that we are on the tailspin of COVID, and what should they be looking at? What other finance management services are available? So please feel free to share.
I cannot stress so importantly, there's a few things that I think small businesses have to really manage, and maybe not become experts in, but people like Vincent is there and available to the local SBDCs in your area to help you understand your business plan. Business plans are important. When I see a borrower, and because I do SBA financing, if And being that, it's even more important today. And what is included in a business plan? One of them being projections. Do you understand your overall expenses and the impact of what's happening in our economic market environment, and what that impact is going to do to your business in projecting what your net is going to be? How are you going to maintain your costs? How are you going to keep or increase your market share? And it's just really important. And that's a piece that we look at and saying, is the business owner competent? Do they understand their business? And it's really important. The other thing too, besides the business plan, I said projections, but where do you get your projections from? It's understanding your financials. What many times, and I know there's a cost involved in getting a bookkeeper, an accountant, or a CPA, but it's a cost that I believe is necessary. Maybe you can start off with a bookkeeper, but by not keeping good books and understanding your numbers, it can have a huge impact to your business when you try to apply for a loan, or let's say you try to sell your business, any of the above, or you're trying, to well, biggest thing for us, trying to get a business loan. So it's really important that they maintain their books. And if you have to spend a little bit of money, because with bookkeeping, getting a CPA, and I know, like I said, it's an added expense, but I believe it's really important. So business plan, make sure you understand your financials and your financials are in order. And that will prepare you in the years to come to get that loan that you need and the capital that you need, because you understand your business and where it's going.
Yeah, I agree 100% with Sarah on that. Especially, I tell a lot of my clients, if they're banking with Chase or they're banking elsewhere, is that what is the bank looking for in order to lend? So, I had a lot of clients where their philosophy was, well, we don't want to show anything because we don't want to pay, we want to pay as least taxes as possible. So our net income on our returns, we want it to show zero. But the reality is a lot of banks are cash flow lenders. So we want to see that net income number be positive. So having a conversation with a CPA is very important to explain to them, say, hey, based on what I'm doing this year, I need to show profit in my net income. And that's a huge first step, which even some CPAs, they're not realizing because they haven't had that conversation with the client about their future lending needs. So it's very important, to Sarah's point, spend the $700, $800 or $1,000, whatever the cost is going to be to obtain a CPA or an accountant. Spend that money, because that's going to really help you in the short term and in the long term to, go from a small business to become a bigger business, to renting a space, to owning a space, or, expanding the business. So that's that was a great point by Sarah there.
Yeah. I'll give you an example of an industry that has to maybe go back and take a look at changing. I mean, let's talk about another component that's in a marketing in a business plan: marketing. How and understanding your costs and your pricing, your end consumer. One of the things that it was a great share about the restaurant who put a sign out the window saying, hey, we're not trying to increase our prices, we're trying to survive. We're passing on our costs to you. It's it's not reflective of they're trying to gouge the consumer, right, or the customer base. But I think the thing is like, for example, restaurants. Have you ever been to a restaurant and they have like, I talked to a lot of restaurants, and this is what they're doing. They're looking at the items on their actual menu. What's costing them money? Because that's a lot of produce, a lot of stuff on their menu that they have to purchase. And how can they minimize their expense? And maybe their marketing and branding, or their 30 items moved down to 15 items that they do really well, so there's a lot of things small business owners can do to go back, look at their business plan, look at where their expenses are, and how can they adjust, and how can they market that with their changes. So
Yeah, I love that you brought that up because we always send our small businesses to go and have a counseling appointment with SBDC because they have experts in the field in the different industries and understanding their business plan, understanding the market, their competitors. And like you said, Sarah, if they need to narrow down the focus from 30 items on a menu to 15 or 10 or whatnot, they're helping them understand that with a consultant through the SBDC. We've sent many clients to them to help them better understand that because they don't have that experience or knowledge and understanding that market or in that industry sector. They may be new, or they may just have been running the business oftentimes, and they're depending on their children to do all the legwork on reading the documents and understanding things. We, especially where we have in the city of Dublin, we have such a variety of ethnicities and minority-owned small businesses. And they're often depending on their children to call the city and talk with consultants and such. So,
And I'm sorry,
helping
I
them
have one more point. I have one more point because the business plan aspect is so important, and I can't stress that enough. Many times we'll have borrowers who come, and they might have been in business for maybe 5 years, right? But because of what happened during the pandemic, they had loss. Let's say they had a net loss for 2 years, and then all of a sudden, 2021, they pick up. Guess what? Even though, usually business plans are required for startups, we're asking business plans from everybody because this impacted everybody, right?
Yep.
And so this is why it's so important for business borrowers to meet with individuals like Vincent at the SBDC and take a refresh. I think borrowers come for a business loan, but they don't understand what the loan is going to be used for. So I ask them, what is the proceeds going to be used for? And they'll say, well, I just need the money. And I just want to see what I qualify for. That's not how a business loan works. You have to understand your business plan. You understand your targets, your growth rate, and why you need the money. Because your money that you're going to receive, whether it be for debt refinance, equipment financing, inventory, whatever, you have to understand why you need the money. How much do you really approximately need? And how is it going to help you? And so again, people like Vincent at your local SBDC will help you figure that out.
Yeah, great.
Yes, one of the things I say sometimes is that the SBDC, one of our roles is to serve as a translator. Because people go to a Chase or they'll go to Key Point and they'll hear what you have to say, but they don't really understand it. And sometimes they don't want to tell you, what are you talking about? I need a cash flow statement. What are you saying I need to do? Understand my ratio. They're afraid to tell you that in that conversation. And so one of our roles is when they come to us is say, here's what the bank is asking you for. Here's what the lender is asking you for, and to help them work through getting what the lender needs. I tell people, bring me the checklist. If the lender gives you a checklist of things that you need to provide, we'll work with you on that checklist. And I think one other thing that is important is that business owners have to realize if they have good financial records, a good sales record, a lot of the information that they need is in their own company. They just probably never looked at it. They've never looked to say, what's your best seller in your product line? You're selling 30 items, as Sarah said, but which ones are the best 15? And if you can get your business to start focusing on where you make your money and make your profits, you're better off than having 30 items on the menu or 30 items for sale if you can get the 15 that really work.
Yep.
Great tools and great tips. I love it. So we're going to transition into our Q&A phase now that we are at our halfway point. And we do have some questions that came in from the audience. I'm going to hand it over to Rhonda to go over those questions with our panel.
All right, and a reminder to all of the participants, the audience members, if you have any questions, please enter them in the Q&A box and we will get to them. So I'll start with our first question. Do you have any programs that are focused towards restaurants or towards business startups? Do you have any programs that can help in those two categories for businesses?
So at SBDC and at Cal State East Bay, we do have a couple of programs that focus on restaurants. We have a restaurant specialty within the SBDC network where people who are looking to get into food-related businesses can go through their training. The other thing is we received a grant from Alameda County, and it is focused. It's called FETA, so it's Food Entrepreneurs Training Assistance. So that's a program that we have rolled out in Alameda County. And so we just signed the contract the beginning of this month, July, and it's supposed to start July 1st. So we're already a little bit behind, but that's one of the programs that's focused on helping restaurants and helping startups.
All right. And then Sarah or Jimmy, do you have any programs that focus towards businesses that are just starting up because they may not have all the qualifications that you normally require?
Yeah, we partnered. Oh, sorry, Sarah. Go ahead.
No, go please.
Okay. Yeah. So for Chase, we're actually one of the SBA preferred lenders. So for any startup business, we partner directly with the SBA and help in regards to business plans, SBA startup costs. So we definitely are looking, at helping, all these startup businesses out there.
And Sarah, did you want to jump in?
So this is a tough one because startups can mean a lot of different things. Is the individual starting a restaurant from scratch? Or are they trying to purchase a franchise? Or are they buying an existing restaurant? Like it's, I encounter a lot of bars who said, you know what, there's this restaurant for sale. They're selling the business and it's a breakfast inn and we want to purchase it. And so although we consider that a startup because it's a new ownership, but there's historicals. So that's different. So there is SBA 7A financing for that because we show historicals. Typically with SBA 7A loans, it's really hard to get a startup loan when you have no industry experience because they look at industry experience. Like for example, we had a borrower who was in the tech industry. Him and his wife were in the tech industry, highly educated, but all of a sudden they wanted to start a restaurant from the ground up, which was going to take construction costs. It's a lot of risk. But they had no experience. So I had to ask them to bring in a partner who did have experience to take ownership in the company because it was just too much. So to answer your question, I know it's not a simple answer. It all depends. But as far as resources available for people who are trying to start, it's really funny because I went to the SBA.gov website and guess where they refer them back to as far as for restaurants, for startups, SBDC, right there on the SBA.gov website. So again, leading back to Vincent, if you are starting in the restaurant industry or in food service, the SBD recommends as a resource to go to your local SBDC and they can provide you with the necessary tools, training, or whatnot, what you need to do to get you help started. Every also city has their own, like for example, you're starting a restaurant and there's ABC license required where you're selling liquor. There's a lot of programs being offered through the cities. And again, it differs from, I believe, by city and where they're providing programs where, they're reducing costs, fees, startup costs, like licensing, taxes, things like that. So I really highly recommend you to go to your city website or see what other programs are available to reduce the overhead startup costs.
Yeah, thank you for that, Sarah, because the term startup can have several different meanings. So I'm glad that you pointed that out. Everyone may think of it in one way, but there are could be other definitions or other forms of a startup that you need to consider. So that was a great tip. So the next question is regarding raising capital from banks. Are there any best practices to improve our business chances of raising capital? And then related to that, what's the best way to establish credit in the business name? Because I know that those two are related.
So for the question for how to establish business credit, every business needs to start off getting a business credit card. I really think that's the easiest way to establish it. If it's a sole proprietor or your LLC, corporations, partnerships, get a tax ID number, EIN number, especially, if you're starting your business, irs.gov. It takes about 5 minutes and you can get your EIN number. And with that is the beginning stages of starting your business credit. And then going to your local bank, credit union, and getting a business credit card. That shows the banks that they're able to see that when you're using that business credit card. A lot of different business credit cards based on the bank you're going to offer different rewards, and a lot of your expenses that you're already planning to use. So if you have a checking account and you're spending on your debit card all these different purchases, you could transfer all that to the business credit card, pay that off every month, because you're already going to be using that money anyway for your expenses. And right there, that's going to really build your established credit. It's going to give you rewards and points that you can bring back into the business. And it's going to show the bank that you're a responsible borrower.
Yes, really great points. And I think the other thing just to add is that small businesses, as they're trying to build their credit, if you are trying to get a commercial or business loan, please note that banks will also, they not only look at your business, but they look at the guarantors, meaning the owners of the business. And typically it's anybody with 20% ownership or more, but we look at your personal credit as well. So I always tell borrowers, maintain not only your business credit, but your personal credit too, because it's really important. Do you have a lot of personal debt? Just like, are you highly leveraged on your personal side? So a lot of times people forget, and I do know with small business owners, because they're bootstrapping, they're using their personal credit, to finance their business. And just like, it's really important to establish a relationship with either Chase Bank or any community lenders, credit unions, and get that deposit relationship started first and show history and relationship with that bank. I also want to mention that when you're looking to get that small credit card, there's micro loans out there. There's small business loans that you get 10,000 up to 50,000 easily. And it's hard to miss to say there's a lot of upcoming fintech banks. Yes, they're not your typical business bank, and yes, they're highly a competitor. But really, honestly, it's about really taking care of the business owner, small business owner, and what's in their best interest. And if they're looking for a quick turnaround, quick financing time, which is really score-based models, like they base upon your business deposits, and you're trying to obtain a loan versus looking at your historical financials, that's one way to look at it. There's such fintech lenders like Bluevine, and there's many others. So I just wanted to throw that out there because sometimes, a small business owner who's trying to establish credit may not be ready traditionally. But I do know that Key Point is about to roll out a program where they are trying to target small business lenders where they maybe have 1 year of historicals, and it's more risk score model based versus looking at your financials and tax returns. So I know a lot of lenders are out there trying to accommodate business borrowers and bringing out additional lending products, really focused at the smaller business community. So.
All right, thank you both. Those are very good tips. And then we have a question about serving the minority small business community. Can you explain or describe how your institution helps serve that community? Or do you have any special programs geared or special outreach, things like that?
I want to just start.
Yeah, we do for Cheatum.
Go ahead. I'm so sorry. I think there was a delay.
Go ahead.
So for Chase, we have what's called minority entrepreneurs. I think maybe after the call, Hannah, I can send you the information. But yeah, it's good for startups and for existing businesses. So it allows, it gives us for startups resources, articles, tips. We'll have small business consultants that will partner up with the startups to kind of go over, how to start a business and what's required and what's the expectations, help with business plans, projections. And then with existing businesses, we do one-on-one coaching. We have different community resources to help with growth opportunities for the meeting, and also different organizations that we partner with. We also offer educational seminars about accessing capital, building wealth, and general financial health through local and national events focused on business growth. And then, of course, we do banking and credit solutions that help manage finances, improve cash flow, and explore lending options. And it can be for any business is eligible to do that. We have a website where you can go in, put your contact information, and small business rep will reach out. And that's the start of the process for that.
That's great. Yeah, if you could share those resources,
Great.
we can put that in our follow-up email. And Sarah,
Absolutely.
anything that you wanted to add?
As a SBA 7A lender, and that's primarily what I specialize in, is that first, it is prohibited by SBA to discriminate based on race, color, or national origin. And so I would like to think that the program is available to all equally, and that there is no, I would think that the SBA program, and with all the resources available, really does help serve the minority small business community. So.
And then Vincent, I don't want to leave you out. Is there anything you wanted to add to that? Oh, Vincent, if you're talking, you're on mute.
Yeah, I didn't hear what you said. You kind of faded out on my end.
Oh, I wanted to know if you wanted to add anything to that question.
So yes, as a California State College, we are always looking at ways to improve the services and deliver more services to minority-based businesses or minority-owned businesses. And as a network, we are working on a program that's going to target Black-owned businesses. And then I work with a couple of lenders. One is a BIPOC lender, which is Black, Indigenous, People of Color lender. So yes, we are constantly looking at ways we can help those business owners get greater access to capital. We work with organizations like Working Solutions, CoBiz in Richmond, and in Contra Costa County. So we're always looking for opportunities that we can help minority business owners.
Great, thank you. So we have not received any additional questions. We'll keep the Q&A box open just in case there are any other questions. As we wrap up, were there any closing remarks that any of the panelists would like to add?
My comment is it's based on the data we know about people who seek technical assistance, such as what we do with SBDC. You get a SCORE, you get Women's Business Centers, you get a Procurement Technical Assistance Center, is that businesses that get help in some form tend to have higher sales, grow faster, and are more profitable. So and whether it be they go to Chase or they go somewhere else, the key is we get away from this mentality that I did it all on my own. That wildcat, thing that people talked about isn't real. But businesses that do better have asked questions and gotten help. And that's what we're here for, is to give them help. We may not be the experts on how to produce your product, but our focus is on how do we help you manage your business better. So we stick more on how to manage it, how to get the financing. But when people start saying, well, how do I make candles? That's not what we're going to do. But if you want help on how you're going to make this business better, that's what we're here for.
That's great.
Yeah, I would say knowledge is power, and don't be afraid to ask questions. The more questions you ask, there's just going to be so many more doors open by just asking questions. There's no dumb question. Any question you ask, you go into any bank, CPA, whoever you're going to, just ask questions. And the more connections you make, the more, social media presence, all those things play a factor. That's going to all help with your business growth.
Mm-hmm.
I know my last ending comments would be, I know sometimes finding a business loan or talking to a bank or credit union can seem a little daunting and a little bit, but if you create a really good relationship with your banker, whether it be, Jimmy or myself, and whether it be Wells or B of A, it's really important because that relationship with your banker, they can actually also guide you. If they are a good loan officer and they're a good BDO or they're a good banker, they will sit and meet with you and go over the process, and they will answer your questions. And a lot of times bankers have network referrals as well, to help guide you, to refer you to another person to help you with this aspect or that aspect, but in help preparing you. But it's really important that a banker can be an important part of your journey, in helping you. Maybe it's not now, but maybe it's a year from now and you're ready. But it just helping you in preparation of what they're going to require and what they're seeing. So.
All right. Thank you all very much. This has been very informative, and some great tips and information have been shared to help make these businesses successful when it comes to financial matters. And before we close, I wanted to also share a few resources that the City of Dublin has offered in the past. This webinar is part of our small business webinar series, and we've offered two webinars in the past. One was on successful social media, and then the other one was on labor challenges, hiring, retaining, and developing talent. So we will make sure that you have access to those webinars as well in our follow-up email. And then in addition to that, we wanted to also talk about some more city resources when it comes to communications. The city really tries to go out of its way to stay in constant contact with our business community. We have a text messaging system where you can sign up to receive text of pertinent business information, and then you can also text the city back with questions or any comments that you may have for us. So it's a two-way text and communication system. And then we have our Dublin business briefs, which go out at least every other month and more often when it comes to business recovery matters. So please, I will put the link in the chat, and please feel free to take a look at the ones that we've sent out in the past, and then you can also sign up. And then I want to also tell you how to contact the city. We have an email address that you can email any questions to us with. And then we have a very good website where we have all of our business resources listed. So I will put those in the chat box as well. And we have a business concierge service where if you have any questions about doing business in Dublin, we can help you, or we can guide you along the right path to help get you where you need to be. If you need help with trying to find a place for your business, we're there to help you. Or if you have questions about any labor issues, we can send you resources that will give you all of the information you need. So please feel free to contact the city with any questions you have. We'll be happy to provide information to you and help get you started. And then lastly, we want to share that we will be launching our Taste the World campaign, where we're promoting all of our restaurants here in Dublin. We are hoping to do that. It's a campaign where if you visit at least 5 restaurants, you will get a gift card to a restaurant here in Dublin. So let me go ahead and put all of these links in the chat where you can find out more information. And then again, we will put it in our follow-up email as well.
Great, thank you, Rhonda. And I just want to say thank you to all the panelists today, Sarah, Jimmy, and Vincent. If it's okay with you, we'd love to share your contact information in our follow-up email. So that way our businesses know who to contact locally here in the Tri-Valley region. I just want to thank you for your time today.
Thank you, Hazel. Thank you, Rhonda.
Hey, thank you guys.
Thank
Thank you so much.
Thank you very much.